welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, the return filing season is here, and July 31st is the deadline to file your income tax returns for the last fiscal year. And in case this whole process of filing ITR seems to be cumbersome, complicated, difficult to you, we are here to simplify and ease this process for you. And to kickstart this series of decoding ITR, with me joining in is renowned tax expert Gauri Chadha. Welcome, Gauri, and thank you so much for speaking to us on this session. And today, to begin this series, we're going to be focusing on simply to break down for all our viewers the kinds of ITR forms that are available, that exist, and how does really one choose the right form before filing the ITR, and also to find out what are the key changes that have taken place, what one should keep in mind for this year's ITR forms as well. So, let's kickstart by understanding, first of all, we all know that there are about 7 forms to choose from. On what basis are these different forms really created, to get this thing first clarified?
First of all, of course, there are 7 forms, but if I talk about ITR 1 and 4, they are very simple.
Okay.
So ITR 1 and 4 have been designed in such a way that a person can file it on their own. They don't need an advisor or a consultant or any professional for help. So they can very well, do it on their own.
Okay.
So other ITRs, I understand, are really complicated, and there are a lot of changes also which have been brought in. And of course, on year-to-year basis, they bring in so many changes. So choosing the right form is very necessary. So if you choose the wrong form, your ITR will be treated as defective. And if you don't rectify that error, or you miss the email, or you ignore that defective notice, then your ITR will be invalid. So it will be
Okay.
as good as not filed. So you have to be very careful while choosing the right ITR form.
Very true. So that's a very, very important point. Before you file the ITR, just know which ITR form are you supposed to file your ITR in, because unless you file that in the correct fashion, your ITR will not be considered as valid. So ensure that that at least happens for you. So let's we have to agree that most of our viewers are salaried class people out there. So let's get that thing first in mind. Let's find out, for the salaried class, which are the key forms that they have to keep in mind, and how should they choose the right form for themselves?
See, for salaried class, ITR 1 is the main form, which is very simple to fill in. But now the thing is that ITR 1 has some conditions. So if you meet those conditions, you can choose ITR 1. Now that condition, I mean, there are a lot of conditions. So first is that it is only for residents. So non-residents cannot file ITR 1. Then your income should be less than 50 lakhs. Plus, you should be having income from only salary and or pension, one house
Okay.
property, and other sources. Other sources means maybe interest from savings account, interest from FDs and all. So now if you have capital gains, now, which is very common these days. In fact, I have noticed that after COVID, every second person has some kind of capital gain. I don't know how,
Okay.
but every second a person has capital gain. So ITR 1 is now not very common. Earlier it used to be very common form, but now I think mostly people go for ITR 2. Then if you have income more than 50 lakhs, then you have to go for ITR 2. If you have more than one house property, or you have any foreign income, or you are a director in any company, or you are holding unlisted equity shares, in such cases, you cannot file ITR 1. You have to
Okay.
go for ITR 2. And
Okay.
ITR 2 is a very big form. ITR 1 is a very small form. ITR 2 is very big. It has a lot of details. So ITR 2 is little complicated. So these are the 2 forms which you can basically use for salaried class. Rest, of course, are for business and companies and all. I think we'll discuss it in
Sure. So two forms out there, ITR 1 and ITR 2. Either of the categories you will be fulfilling for these two. So most likely you have to choose between ITR 1 and ITR 2. Simply put, if you have only one source of your income, ITR 1 is the one that you have to choose. In case you have capital gains, then definitely your two properties or the conditions that have been laid out right there by Gauri, those people have to go for ITR 2. So the question that you put, Gauri, that how is it possible that every other person is actually getting to fill ITR 2 now? Why is it that everybody has capital gains? So I'm just trying to figure out, is it that most people have started to invest in either mutual funds or direct equities? Does that form a major part of the capital gain? And if that is a case, then definitely that makes an easy distinction in the minds of people that if I invest in mutual funds, I have to go for ITR 2.
Definitely, Sakshi. Now there are 2 points in this case. First is somehow during COVID period, if you must have seen that so many demat accounts were opened up. I
Yeah,
don't have a figure now in hand, but crores and crores of people were opening demat accounts during COVID. So now
yeah,
all of them have capital gains.
yeah.
Second is the introduction of AIS. Earlier there was no AIS.
Hmm.
Now, when AIS is in place, so the AIS basically reports all the incomes. Now, while filing your return, earlier you had no clue that you had, you maybe you miss your capital gain income or something. And now with AIS, you can't miss it because when you see your AIS, you see your capital gain, you see sale of mutual funds, you see sale of equity, direct equity, and then you realize that you had made some sales
Sure.
during the year and you have to report that. So now this is one of the reasons that mostly people are filing ITR 2. Earlier, of course, they used to miss it and the department was unaware. Now you cannot be left behind.
Okay. Now, what if somebody is working as a consultant and not as a direct salaried employee? How should one choose a form for in that case?
See, so if you are a consultant, of course, you're not getting a salary. You don't get Form 16. You usually get Form 16A, and 10% TDS is deducted for you. So if you are a consultant professional, like you are a doctor, engineer, chartered accountant, or otherwise also you are working as a consultant, in that case you can't fill up ITR 1 or 2. You have to go for ITR 3 or ITR 4. Now, ITR 3 is basically where you prepare your proper profit and loss account and balance sheet, or you are a partner in firm, you have income from cryptocurrencies, and you are treating that income as a business income. Then you have to file ITR 3. So
Okay.
ITR 3 again is little complicated. You will be needing help of a professional. Now, if you go for ITR 4, so ITR
Hmm.
4, you can go for basically if you have a trading business and or you are a professional, in that case you can file ITR 4, which is also known as Sugam return, which is very simple to fill in. So
Mm-hmm.
in business, if your turnover is less than 2 crores, you can file ITR 4. You have to take a figure which is above 6 to 8% of your total turnover, and you can declare your profit, which according to me should be the actual profit. Usually
Okay.
people don't show actual profit, but yes, you have to show the actual profit. And if you are a professional like chartered accountant, doctor, engineer, in that case, if your turnover is less than 50 lakhs, you have to show minimum profit of 50%. And again, you
Okay.
have to show actual. It is not that you have to show 50 only. So,
Okay.
so ITR 4 is for professionals and traders and all, and it's a very easy form.
What about content creators? These days, we have seen a flurry of YouTube influencers, professional influencers also, who have taken this as a serious career option. How should they be filing their ITRs, and do they also need to file an ITR first?
Definitely, definitely. If your income is more than 2.5 lakhs or you're falling under any other condition, you have to file your ITR. So content creators are also doing a business. So it is their business income. It is not a salary. So again, for you, it is ITR 3 and 4. You have to prepare your balance sheet P&L, or you can go for presumptive income. but of course you have to take care of the turnover. So because what I have read is there are few YouTubers who are earning in crores. So if your turnover is more than 2 crores, then of course you can't go for presumptive income, and you have to go for ITR 3 and prepare the balance sheet and P&L.
Okay. Now let's discuss what about 5, 6 and 7 forms. What are they, these forms? How are they distinguished from the first 4 forms, and who should be looking at these forms?
See, form 5, 6, and 7 are very complicated forms. So, not exactly 5. 5 is also complicated, but 6 and 7 are quite complicated. So, idea 5 is basically for partnership firms, LLPs, association of persons. So, this is ITR 5. Again, you have to prepare your profit and loss account, balance sheet, and many other details are asked for. It's a big, huge form. ITR 6 is basically for companies. So all the
Okay.
companies, no matter what they are doing, they are in consulting or trading or anything, if it's a private limited company or limited company, ITR 6 is the form for them. Now,
Okay.
ITR 7 is just for specific companies which come under few sections like 139 4A, 139 4B, 139 4C, 139 4D. It is very rare, so it's not a very common form, but yeah, again, it's a very complicated form.
All right. And, apart from all the forms that we've discussed, there have been certain important changes that have been implemented in the ITR forms as well, which investors must and taxpayers must keep in mind, because they will be filing the income tax return now before 31st July. And these changes have been made for this fiscal year 2023 only. So which are these important changes that one should keep in mind?
So, Sakshi, every year there are many changes. So this year, what they have done is they have given importance to first of all cryptocurrencies. So they have another separate column for cryptocurrencies where you can show your income from cryptocurrencies and you can tax it accordingly. Then, while you are claiming a deduction for donation which you have given, which comes under section 80G, usually you used to enter the PAN, amount, and everything. But now you have to enter ARN number also, which is a reference number. So that has been made compulsory now. Without that, you won't get a deduction under section 80G.
Hmm.
Then for intraday trading, there's another separate column now. So earlier that was missing. So they have separate column for that. Then there's a major change in TCS. So now, in case your TCS has been collected in some other relatives, your suppose your father's or someone else's name, that you can claim in your return. They have a separate column. There's a separate page for that, and you can just enter the correct details and you can claim that.
Okay.
Then income from foreign retirement accounts has now been made taxable on receipt basis. Like whenever you withdraw money from that or whenever you get any amount from that, that has become taxable. So these are the few changes. And of course, for opting out or opting in the new and old regime is
Yeah.
again an change, and you have to disclose that. You have to basically click on the appropriate column and then opt in or opt out of the regime.
All right. Well, great information there, put together by you, Gauri. And that will definitely help all our viewers really understand how to proceed, how to take the first steps to filing of your ITR. This is a summation of which are the forms out there, which is the correct form that you need to choose, which is absolutely essential if you want the ITR to be processed correctly as well. And of course, the changes that have been implemented, and all of these you have to keep in mind in case you're filing the ITR on your own or you're doing that with a professional help as well. So do be mindful of all of these changes as well when you file them. Many thanks, Gauri, for being with us on this special edition, helping all our viewers understand the intricacies of these forms, which seem to be very, very complicated for the general public out there. But I do hope that this show has eased some of the doubts or clarified some of the doubts which you already had for these ITR forms as well. We'll wrap it up at that, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. what is the investment thesis behind the large and the mid-cap funds? You did say that one or two of these should definitely form a part of our core portfolio, but what exactly